mostly in English, but maybe some for Mandarin. If you want to ask a question in the chat room, I can still answer you in Mandarin. 如果你想要在这个聊天区提问的话，我还是可以回答中文的。But mostly this part because it's a live stream, but also a video. I'm going to upload this video on YouTube to all the audience to know what I'm going to say. Okay, so yeah, please. Okay, thank you. Please, DP IPS. All right, let's go. So, what is so interesting about trading execution, right? There's always when if you do not have some professional training, when you enter a trade, no matter what kind of vehicle you are trading, you may encounter several parts of your mindset may change when the market goes, right? Your mindset may went upside down to us. If let's say if you make a long position here this morning, maybe you had you have a 1805 buy limit this morning. Wow, it's a very good trade, right? It was very, very good trade. Someone had that buy limit there. But so first of all, when you see your profit went up a lot, what's your emotion? You feel very happy, right? But there would be two kinds of classical reaction when you are winning. First is taking profit too easily. That's a classical mistake. That is, let's say if you had 1805 long, and you see, oh, it went so well, so you just close everything when you just went green like 50 or 80 pips, and you close everything. So by now, or the 200 pips, none of your business because you closed your profit, right? All right, but on the opposite, the second classical reaction is totally different. That is, doesn't want to take profit at all. So some of the traders that are totally different from the first ones, because they are doing what? They are like, when he enter a trade, he'll be like, oh, I gotta take this trade to the sky. I want aim for 1900 or higher. So I don't want to close profit anything here. But both reaction is not the best solution. Both are not the best solution, because there are very obvious flaw to this two execution. If you take profit too easily when the trade goes very well, you are not on the trend, right? But if you don't want to take profit at all, what's the problem? The problem is if we turned back, all the open profit will be gone. So 能不能双语直播？哎，可以双语直播。J 老师，嗨，大家好。因为我主要这一 part 在这个上午时间段还是给全世界的这个观看者，当然这就慢慢的培养这个习惯，就要好一段时间才能做一次 TradingView 直播，对吧？最近太忙碌了，有空时候难免来顾一下这个全球的粉丝们，所以大部分时候我还是讲英文，好吧？那 then so these two are not the best solution. So what is how can we find a solution to combine both the advantage of doing that? Because let's say if you are worrying about your profit become, you may do this, right? So and if you want to be on the trend, you may do the second. So that's two very extreme solution. We don't want the extreme solution. Let's try to combine these two. Let's try to combine. How? So that's how we go. We have to taking profit partially. Okay, taking profit partially and trying to be on the trend when the trend is on your side. Okay, so by how? First, you can try to set a you must take profit at some point, right? So set a risk reward ratio that you must okay. If you do not know what let's make it smaller. Okay, my solution is you have to set a risk reward ratio. That is if you are risking $100. If you are risking $100, when the open profit hit some target, you are required. There's no exception. You have to take some profit, right? So set for example, it will be 1-to-1. For some, this could be 2-to-1, or even higher, even lower. No problem. You have to think it before you are trading. Okay, so even higher, others, all of which work. But the point is, the lower you set, the higher chance you could get less profit taken. So the lower that is let's say if you have a trading plan, like you have okay, let's say here right here we got this 30-minute shooting star, right? We have this 30-minute shooting star. So if we want to trade this 30-minute shooting star, you may put a sell stop in 1826, 2605, maybe somewhere here, and pull you out about 1833. All right. So this is a trading plan, and you can see the market could go wherever it wants, and all of the price actions are reasonable. Okay, please think it that way. So just don't blame your losing on the market, because no matter you trade or not, no matter the direction you trade, the market just moves every day. So you have to recognize that it can go anywhere, right? So the first of all, when we try to do this short, maybe we put a sell stop here and you hit your entry. It could, like, maybe first of all you have some continuations or more, but at some point the buyer is starting to buy, so your profit gone away, right? Something like that. So the point is, if let's say if this is 1-to-1, and that's more, maybe here is 2-to-1, and maybe some of the people would want this ratio to be higher. They say they want to win a trade to cover the other trade's loss. So you can see it's most probably that it hit the 1-to-1 spot, right? So if the market goes like this, these people who set their first price target at 1-to-1 could take their risk back. If I risk $100, I risk nothing when I take half of my position off at 1-to-1 risk reward, right? So, and maybe you can, when if somebody may say, oh no, it's not always 1-to-1 if you go this way. Yeah, you hit the entry and you'll stop. That would be a direct stop out, right? A direct stop out, and we're fine with it. We're fine with it because it's like, yeah, $100 risk. We're fine with the $100 risk. If you are not fine with the $100 risk, please, you can set this lower and lower until you are more than comfortable than taking the trade. So we are not afraid of this kind of situations, but when we are winning money, we don't want to put all of our profit back. We don't want everything be gone. So that's how we would want to, the first solution here, set a risk reward that you must take some profit. And I had a suggestion that let's take some profit. Let's define sum. What is sum? In my case, this sum means 50% of your position. Okay, 50% of your position here. So go back. So let's say the market can go like this way, and all of a sudden turning back. So if you set 1-to-1, you are winning. If you set 2-to-1, oh sorry, you still lose your $100, right? But if it could still go like this. If you go like this, the 2-to-1 part can get, they could get like $100 here, and then I only have half of the shares. So if it went all the way back to here, they could only lose $50 because I cut half of my positions, right? So if you do 2-to-1 as your first price target, then you are definitely, if you get your TP1, you definitely will win in this trade. If you do it on 1-to-1, you make a free position. So the worst case scenario is that you break even. It's a break even trade, right? You win $50 in the first place and you stopped out on the other half. So like nothing, a zero. But zero is fine. Zero is fine because you compare to those who lose $100, right? There's always say it's a debate. People would like 1-to-1, 2-to-1, 3-to-1, or any kind of risk reward, or some may be use like 618 maybe. In this case, it's between 1-to-1 to 2-to-1. Some may use this as their first price target, and all will be fine. But the most important thing is that you know, the higher the risk reward is, the lower the winning ratio is. Okay, all right, and let's go and let's continue. So, okay, let's everyone here, please choose. Please choose. Have a choice. If you do 1-to-1 as your first price target, please press A in the chat room. If you do 2-to-1, please press B in the chat room. If you do none of the above, other choices, please press C in the chat room. 就是大家如果你喜欢1:1减仓，可以在聊天室打个 A； 喜欢2:1减仓，可以在聊天室打个 B； 喜欢其他可以打个 C。这个 TradingView 直播有趣的地方就是我这个互动呢，未来任何一个看回放的人还是可以回，对啊，就是像弹幕一样啊。All right, it's okay to choose C, but my suggestion is that you are very aware of what the risk reward is. It's not a random choice. If you set something in here, that means every trade, no exception, every trade I will do this execution in the first place, right? So my personally, I would do A. I would do 1-to-1 to take half of my profit. As long as the most part is, if I know, if a trade I take my profit below 1-to-1 risk reward, the trade doesn't make any sense, right? I don't even want to be involved in the trade. So that's a minimum standard, and also has the highest winning ratio, right? So it has the highest winning ratio. That's the first good part of 1-to-1 to take half of my position off. And second, it has another very good part is it has highest trading frequency. Why? To get why? Why do 1-to-1 profit taking could get you highest trading frequency? The reason is it's, let's say if you have like set a maximum loss of a trading day, it could be in a percentage or a clear numbers. Both will work, but let's say you do it in percentage. For me, it would be 6%. If I lost 6% in a trading day, I won't take any trade anymore, right? How? All right. And second, risk for each trade. What's your risk for each trade? we suggest this number would be like 2% maybe. If you have a $5,000 account, a 2% may mean $100 for each trade. So these two, when these two combine together, these two logic combine together, that makes you a conclusion that is 3 trades at a time at most. What does it mean? It means if let's say it's a Monday morning, I would like to start my trading, and I take several trades. I take 5 trades at the same time. If 5 of the trades were stopped out, all of the trades were stopped out, how many percentage I lost in that day? If I took 5 in a time and each for 2%, that I could lost 10% a day, and that's violate the first rule. That's violating the first rule, right? So if this is very important, I generally ask everyone to set these 2 numbers. It could be different than my example, but you have to be aware of what your maximum loss of a trading day is to avoid when your emotions are taking over and you're starting to make some very bad decision to make all your profit, all your account be gone in 1 trading day. That's not acceptable, so you have to do it priorly. Alright, so if you do 1-to-1 profit taking, if you do 1-to-1, that means the second result, that is, if one of the trade got 1-to-1, right? Of course, I know that you may not take 3 trades at a time, but we're talking about the most part, right? So let's say if you already took 3 trades at a time, so you have some 3 open positions that with a maximum 6% loss, and that's fine. That's within our rule. And suddenly, one of the trade like this, it's an inside 30. It's okay. It's a good trade. I like this trade. I like this inside 30 trade. So, if this trade got my 1-to-1, that means that trade risk down to 0. And so my maximum loss turned back to 4%. I can take another 2% trade, right? So and so on and so on and so on. So this is most easily to get compared to 2-to-1, compared to 3-to-1, compared to all other choices. And you say, no, Joe, you are wrong. If you do 0.5, if you do this way, either that could get your higher trading frequency, but like what I said, this is not even an option. We don't want the trade to be taken profit in like only half of the risk. That trade doesn't even worth the risk, right? So this is the point I'm making. That is why I choose 1-to-1 to cut 50 of my position off. All right. So Is that clear? Is that clear to all you guys? 这个英文版啊，聊到这儿，不知道还有多少同学有理解我现在在讲什么。By far, if you have any kind of questions, please feel free to put in the chat room. 如果你有任何问题的话，可以现在打在聊天区中。If you understand everything I said and if you understand everything I said, please say press 1. 如果你完全理解了，可以打个1。Hello, Vicentista. I'm just here to learn. I'm really fresh trader. Okay, so this course, this section could really help you out. This is very important because all the new traders are worrying about one question. Hey, I've read a lot of books. Those books are teaching me how to enter a trade. They teach me, this Baidu have some price actions, have some patterns, have some indicators says I can buy here. So you put so much effort to solve the problem about entry, but you have no idea how to take your position off. So that turn back to these two extremely bad results. We don't want both. We want a solution that can have both advantage and have the least flow, have the least like the bad part. Okay. So this is the next move. I understand what you're saying. I just don't understand the Chinese. No problem. So yes, because my audience come from mostly in people using Mandarin as main languages. Okay, so let's continue. And people are asking, okay, I understand what you are saying, so please talk about BTC. No problem. So, I mean, the point is not about whether BTC should go higher or lower. That's not the point I'm going to make today. The point is, whenever you're trying to open a position in BTC, in gold, in forex, in stocks, you have to have a trading plan before you enter a trade, right? And the trading plans except the reason, the pattern. Maybe you say, it's a daily demand zone, you want to long here, something like that. No problem. A daily supply zone here, you want to short here, fine, no problem. But the most part is, can you take the risk? Are you aware of how many risks you are taking? Because we see so many information, so many news pop out that whenever especially in BTC, right? Especially in Bitcoin, that whenever there is a mad bozu, there is a huge rally or a huge slump, there are many people getting margin calls, many people losing so amount of money. Money is not countable. Okay, losing amount of money. So the problem is those people do not know. Let's define risk in trading. In my definition, risk in trading is about one thing. Make sure you are fine with what? With the worst case scenario. typo. Anytime. Actually, I can change a word to make more sense. Make sure you are fine with the worst case scenario anytime in your life. Not only in the trade. Please, when you are trying to make a decision, you have to think about what is the worst case scenario. Right? Like when you want to loan BTC USD, you have to say, oh, what if when I loan and you went back, can I bear the risk? Can I take the risk? Okay? But most of people do not know. And they just think, oh, this could be 50,000 a Bitcoin, or for the people who short, they say, oh, this is a bubble, this should go down to where. But I'm fine with all kinds of opinion. That's opinion, that's your choice. No problem. But the most problem is they do not know. They know nothing about risk. Right? So how to measure worst case scenario? Let's say for someone who if you do not calculate your risk before you enter a trade, that is, you are risking your account on a trade. That's my question 1. Are you risking your account on every trade you take? Who are risking their account on every trade they take? Who? The people who don't set a stop loss point. Alright, can everybody get what I'm talking about? I say, if you don't set stop loss, you are risking your account on every trade you take. Right? You say, no. When I saw my open loss, I would cut my loss manually. Right? But most of the case, people will be like, if you don't set the stop loss before you are trading, if you don't, when let's say if you bought at 40,000 and you say, okay, when the direction changed, I could get out of the trade, but when it really changed and you do not have a plan, you may what? You may say, oh, let's wait. Maybe you could come back to my cost to 4,100 at some point, so I don't want to get out of my position. Oh no, I already lost so many, I can't take the loss. If I take loss, I lost. I don't want to do that. So and so on. That's a negative cycle. So finally, even if you deny that, you may probably risk your account on every trade you take. So we don't want to risk my account on that, right? And why it's bigger than account? Why it's bigger than account? Let's change a more strong word, that is career. Actually, at some point in my trading career, I was like, in the first place, I trying to give up at some point when I did very bad for quite a while. And I was like, oh, at some point, I'm going to take a career risking trade. Why? If this trade failed, I'm going to give up. I graduate on trading, right? 我从交易中毕业了，是吧？ But do you see? Even if I'm going to risk my career in the trade, I think of it previously, before I enter a trade, right? But most of the people are not aware of what kind of risk they are taking, and they just think about the good part. Think about if you are right, how many money you can make. But you have not thinking about the worst case scenario. In my case, every trade, let's say, taking a trade, what is the worst case scenario? Let's do it in let's say that's WCX, worst case scenario. Will Carly stand? Let's take a trade. Worst case scenario could be 1, being stopped out. What can be worse? Maybe you encountered some extent of slippage, maybe, but that's fine. And but if you don't set stop loss, you are risking margin call, like account. Alright, what if you stop loss? If you no stop loss. So let's make a choice. Which of the two risks are you comfortable with? Which of the risks are you comfortable with? I think most of the people would choose 1. And that's the only one question left. That is, how much risk you are willing to take in each trade. And that's this question, right? So again, if you have a 5,000 account, I'm suggesting you to do 100 risk per trade. If you lost, if you are stopped out for one trade, it turned to 4,900. 2 trade 4,800. You have at the most situation, the extreme situation will be you lost 50 trades in a row and you still lose everything in your account, right? But that is before you're trying to do this. This is when should you start it to do this project, to do this plan? It's after you prove alright, what pops out in your mind when you see the word demo account? This is what I did when I was trained in Wall Street, right? Because the institution is not idiot. They don't want to risk their money to a rookie that knows nothing, right? So you have to prove that you are available to do it on the live account, right? How to prove it? You have to show your ability in a demo account to those leaders, to those risk managers, and for quite a while, if you can prove your profitability, then they could give you money to trade. That's how the proprietary business works. But when it comes to personal account, when it comes to retail traders, people are hating demo account. The words are like what? They say, oh, demo account is so boring. Oh, if you can make so much money on demo account, that doesn't mean everything. You can't really copy your success to live account. Yes, that's right. But let's turn back. If you can't even make money in demo account, how in the world are you be so confident that you can make it on live account? Let's say demo account is way more easier than live account. That is like when you drive in a drive license practice court, something like that. Yeah, so you are in the drive license, and you drive in a setting, not real road. That's way different than real driving. Yes, but still you have to pass all the tests, all the exam, that you can get your driver's license and to try real road driving, right? That's exactly same logic to trading. But demo account means you have the most interesting part about demo account. It's about trying to set your rule. Alright, today we talk about half of the rule. That is, we take half of my position off when the risk reward hit 1-to-1. That is a rule. A rule can make you money or make you lose money, right? It can make you lose money. So you have to taste how your rule works out. If it works out very, very well in maybe 50 trades, you doing with same rule and you can make money, then that's the time you to do deposit and do it on live account. But if these 50 trades you are not able to make money, that is this way. If you are winning, you can, alright, you get your trader's license, you can do live account. And you are losing. If you are losing, please, at least you are not losing your real money from your hard working, right? Working is, none of the money comes out of nowhere, comes out of the sky, raining money. No. So if you are losing, please try another 50. Adjust your rule. Try another 50 until you can do 50 trades with the same rule. There's a very obvious, a very common mistake that a rookie may make. That is, oh, I have a rule. Yes, I already have a rule, but the rule didn't work out. Like you are stopped out 5 trades in a row. you are stopped out 5 trade in a row in the first place when you starting your demo account training, and you were like, oh, my rule is bad rule, let's change my rule. That is very unnecessary, because if your 50 trades are not within one rule, then your result means nothing. Alright. That is what? That is garbage in. You put garbage data into your trading system. So you have a garbage result. That means nothing because your rule is not stable. If your rule is not stable, your result is not stable. If your result is not stable, then you are not able to trade in live account. Right? Making any sense to you? So that's the suggestion I'm going to make. That is, if you already passed this section, you are already trading with your live account, then I'm asking you, trying to make your rule more clearly, more executable, right? More executable. And if you are just new to trading, actually I don't suggest you to trade in live account directly. Some of people might say, hey, I feel nothing in demo account. That's boring. But are you trading for exciting or for making money? If we are trading for exciting, okay, I have no opinion on it and no judgment on it. Please, get your excitement. But if you are trying to establish a trading system to a stable, to be profitable continuously, then I'm suggesting you to do everything on a demo account in the first place and trying to establish your rule. A rule contains of 4 parts. That's okay. I mean, the time is almost up, so let's make my conclusion here, because we don't have too many time, but some, if you can get some of the knowledge, some of the application, some of the execution strategy in this hour, this section means something. Alright, the rule comes out of 4 parts. First part is about your entry. Today we are not talking about entry, right? We are not talking about entry. There are so many, at least 80% of the trading training or trading books, they are trying to teach you how to enter a trade, entry. So I believe, everyone comes up here, you know something about trading. Maybe you are like me, you're doing inside bars, shooting stars. Maybe you like moving averages. Maybe you like some other ways to enter a trade. That's the first part you have to solve in your rule. That is, what kind of trade, when there is one trade you must take, what kind of trade, try to define it. Okay. And second, that's today's point. The most point is about your trade execution, about your profit taking, about your execution. And let's define more. What is execution? That is, you have 100% your position how to get out of a trade. Okay, let's do. I have no choice because I can do it any writer. All right. So today we are talking about half of the solution. The other 50%, maybe next time we could talk about that. But the first 50% of my position I could do is set a risk reward point that I max tax profit, right? And the other 50% we can talk maybe later. And the third rule is about your risk rule. Today we still cover some of the content today, right? Your risk rule is about something here, like if you are like what's your maximum loss in a trading day, what's your risk per trade, something like that. And could be way more like your maximum loss in a week, your maximum loss in a month, something like that. So a risk rule is very, very important to make sense on your rule. Okay, and finally part, it's about let's make it easier to understand. There are two kinds of traders. A traders may say that he has bad discipline. Do anyone know how to spell discipline? Please spell discipline in the chat room. Discipline. I forgot how to spell. All right. So some say they do not have discipline. That's a problem because they actually do not have rule. For the people who have rule, that have the chance to say discipline, right? That has chance to say discipline. But for the people who doesn't have rule, if you don't have a rule, you don't have discipline. You don't have nothing to be disciplined, right? So first of all, you have to try to make a rule. And second, you have to set a lot of rules to make you stick to your rule. But a question is, does a trader with rule and discipline this thank you everyone, does a trader with rule and discipline equal to is yeah, we're always talking about you should have rules, you should have discipline. But is that equal to profitable? No, it's not. You may be a disciplined loser still, right? So a rule may not be a profitable rule until you're trying to get it better and better. So the point for the fourth part of the rule is about like this 50 trades. Every 50 trades, I'm going to have a examine on my winning ratio, and my risk reward, and my frequency. Actually, this is the three parts of trading. Right? And if you are winning, okay, no problem. Keep your tempo to do next 50 trades. But if you are losing, you have to try some solution let's say if you are losing because of your winning ratio is too low. If your winning ratio is too low to like 30% only, and you have to try to find out why your winning percent is so low. And mostly when I say some of the traders with low winning percentage, that is, they may use B or C or others. I mean, my first suggestion, if you have low winning percentage problems, try 1-to-1 to take half of the profit. It could significantly enhance your winning ratio. Why? Why 1-to-1 could significantly enhance your winning ratio? Because it's like make a 1-to-1 bet to the market, right? I have 30 pips risk. Let's say that the market is random. It could go anywhere, right? It's random. It could go anywhere. So for the mathematics, the percentage, the probability it went high 30 pips, and the probability it went down 30 pips could be almost the same. So your winning ratio would be very, very close to 50% if you do 1-to-1. And all your entry rules, all your rules about entry is about trying to break out the 1-to-1 and 50% list balance. Yeah, you're trying to break out list balance. That is, list balance happens where? Happens in Las Vegas. Happens in Vegas. That is, you do dice, you do pokers. That is 1-to-1 and 50% winning percentage. And the casinos have some ways to make their winning percentage a little higher than 50%. That is if the dice draw out with 6, 6, 6. Then this, even if you buy high, looks like the highest one, but when the result is 3, 6, then people who buy high still losing. Right? That's what happened in casino, right? And the logic is that's how casino makes money. They make slightly higher winning percentage than 50%, and with 1-to-1 risk, 1-to-1 risk. All right, for people that hear this part for the first time, I mean, we're trying to be the casino rather than the gamblers. We are trying to do the casino because when we're asking you who makes more money, gamblers or casino, I mean, the answer is way clear. The casino, right? We're trying to be the casino, and we learned so many ways to enter a trade. We are trying to break out the balance of 50% with 1-to-1. How? If your indicators can make your winning percentage a little higher, you are making money. If you do inside bars like me, can make your risk reward ratio averagely a little higher. For my part, if you do inside bars with proper execution, the risk reward overall could be higher than 2-to-1. So maybe my situation is actually like this one. My winning percentage is around 45% with 2-to-1. This is my situation now. I don't know how everybody feels about this result, but if you are able to get this result in your 50 trades, I would say I will give you applause that you already did very well, or you already beat at least 90% of the traders, because don't forget 80% of which are losing, right? If you can do this, you are already very good. But again, how could 80% of people can't break out this balance? How? If gamblers could have 50% to win in a game, but traders, 80% are losing. Why? How could 80% of traders beaten? Try to think about it. How could 80% of traders can't even beat a dice? The real part is they don't have a rule. They cut. That is, turn back to this part, how we started. When you were able to buy Bitcoin at 1,000, at 10,000, maybe at 10,000, most of the people give up all their positions at like 12,000, maybe 15,000. So they do not hold their. You don't see many people with their cost below 20,000 recently, right? Because they taking profit too easy. And second, there are so many, again, the people who doesn't have rules. They like the gold. Let's say the gold. There are so many gold buyers without out. And last year they had a very wonderful year, especially when August, it hit more than 2,000, right? But if they if they didn't take any kind of profit, everything went back, right? So both aren't something we want. We want this, and let's leave something for our next section, our next seminar. How to deal with the next part, the next 50%. Let's maybe next time. All right, next time. Thanks everybody for joining. I am TraderJoeLee, and I see, wow, so many people are thanks everybody for interacting with me in the chat room. And if you like my content, you can, again, I'm TraderJoeLee, right? You can go to all of my articles, all of my ideas I've been published, and you can see my signatures. You can find my YouTube channel. You can find my YouTube. 你可以找到我的 YouTube 频道啊，欢迎大家来关注周老师的 YouTube. Welcome everyone for following me on YouTube, and I will more and more to do English content. Most of the videos I upload was in Mandarin, but I'm trying to do more, as I see there are still many people who need this kind of courses, right? Thanks everyone, great information, really his advice. Thank you very much for the invitation. Thank you, no problem. And number 2 need to be the number 1. One question, what's the difference between of stop loss and stop limit? Oh, hey, NG Wang. That's different. That's two. When you say stop limit, what is stop limit? That's an older type. Okay, I'm going to answer everybody's questions in the chat room. Stop limit is the older type. This older type means when you hit the stop price, it will set a limit order for you. I'm not talking about order type. When I talking about stop loss. I'm talking about risk. So that's a totally different. That's a total different concept. Okay. Next, did you work a side job while trading a demo account? No. At that time, no. I was all-time demo account traders because I have to prove I'm profitable to my leaders. Okay, how long do they recommend trading on a demo account? Not long, not about time. Not about time. Demo account is not about time. It's about trades you take. If one day you can't do this one. If you can't do the 50 trades in one rule to be profitable, please don't do it on live account. Trading is about turning your knowledge into money. If your knowledge, your execution is not able to make you money, then they will make you losing, right? And there's no point to do live account if you know clearly your knowledge is not enough, right? You have some lessons offline, just me, live for me, refresh, discipline, thank you. Didn't fall asleep on his class, great stuff, thank you. Will you be posting this stream on your YouTube channel? Yes. Good advice. Alright, so thanks everyone for joining. I'm Trader Joe. Please, next time if you see your notification that TraderJoeLee is on streaming, please join my section. Maybe we can talk about the next 50%. Alright, thank you everyone. See you next time. Bye bye.